Hello, my fellow freedom builders, and welcome back to the channel. Now, in today's red market, I thought it would be kind of opportune to make a little video about how to spot market tops and market bottoms. And I know there are people out there saying, no, that can't be done, you cannot time the market. And they are part right, part wrong. Because it is possible to time the market. It is possible to see the great turning points in the overall market. I'm going to show you today, and I think if you watch this video right to the end, you will agree with me. But they are right in the sense that it is not possible to spot the exact second where the market has a top or has a bottom. It takes a while for the market to build a structure where you can say, now we are at a turning point, and I'm going to show you today exactly how to do that, so you don't need me to make videos and saying, now this is a turning point. From today off, when you finish this 15-20 minutes video, I think you should be able to spot them all by yourself. It is actually not that hard, and you don't need a degree in some sort of finance. Now, first of all, before we go any further, if you like the content on this channel, please subscribe to the channel, please like the video and all that. And if you want to make sure that you don't miss any of the best videos, then please go into our website here, buildingfreedom.dk. I'll link to it below the video, and sign up for the newsletter, and I'll send all sorts of interesting stuff to you. As you can see, it is the financial turtle that is our logo, and that is all about getting rich slowly. So let's have a look at a market structure to see how a market turn point is building up. Now, I actually, when I woke up this morning, the plan was to have a day off from video making, but I started to look at some of the larger indices in the world, and I realized that I had to write something about this to my subscribers on my Danish subscription service called Market Timer Special. There's also a link to that below if you speak Danish, or if you're interested in hearing more about that. All right, so let's have a look at the German DAX index here. As you can see, what I'm looking for when I'm looking at potential market tops and bottoms, and I am saying potential because I'm not hitting it 100% of the time, but let's have a look at it here. What you can see is that we have an upturn in the market. I'll get back to this later on, because as you can see, I have had a thumbs up and a thumbs down here, because this is actually one of the only cases in my entire career and investing in over 30 years where we didn't have just some sort of a turning area where we could see now we are starting slowly to turn downwards. We just went from an all-time high, and then the next week it turned down, and then we fell off a cliff. And that is the reason why I'm saying that I'm not always spotting the top. However, I did manage to get out of all my positions and only have a drawdown around 10% in this market here, so that was absolutely okay. But what I'm looking for here is, I'm looking for a trend up, and I think you can see we have it here. This is the weekly chart, and this is actually where I'm spotting tops and bottoms. Now, we can draw some lines here, and they don't have to be parallel, but we can draw some lines here over the tops and over the bottoms. And right here, we can see we are in a very nice trend. Then we start to move a bit sideways, and the next top that is forming, and of course I cannot draw this line the second this is forming. I can only draw it when we get down here somewhere. I can say, well, this looks like we are still going upwards. We have a higher top, but it is not going up as quickly as this. The momentum is going a bit out of the market. That doesn't have to mean that we are going down. It could be that it is just a sideways movement before we go up again. So what I'm looking for here is some bottoms here. I can see, oh, we might have a line here, so we have some bottoms here. It might be just a short temporary break before we go further up. But then the bottoms are broken. We're going a bit up and down again, meaning now we are forming lower tops and lower bottoms. Now in the DAX index here, I would suggest that we are at the beginning of a downwards movement right now, and I'll support that with some historic data just in a second. But what we can see here is first of all, we have no idea how far down we will go. It might be that we are just going down to 11,000 in the DAX index, and then we start to make some higher bottoms again here and some higher tops, then we might get into an upwards trending market again. That's how it goes. But this definitely suggests that we are at some point of a downwards movement. And I would be very, very careful of putting money into German stocks right now. I would at least be very picky and choose some sectors that are in a very good uptrend and some stocks that are showing all my trending signals. But let's have a look at some of the other markets, because this is kind of obvious. And in a second, I'll take you on a trip in my time machine back in time in the US market, because that's where we have the most data. Now let's have a look at the Swedish markets. That's also a market I'm looking at. Now what you can see here is that we are not as far in the process of building this market. We still have the upwards trending market here. Then we have some sort of triangle formation here, and we have broken down. Now I don't know, and you don't know, if we are just going up from here. That can easily be. Maybe it finds a bottom here and say, yes, now we start a bull market. But what we would need to see here, and the reason why I have actually been selling a bit out of my Swedish stock this morning when I got some sell signals, what I think we are going to see here over the next weeks, a month, you can see this goes into 2021 here. I suggest that we are gonna see maybe a bit more down movements, then a bit tipping up, making a new top here, and the second we start to realize that we have a new top so that we can draw this line with some confidence, then I will be mostly out of the Swedish stock market. So this is also this is not a complete top formation, but I think you can see what I'm looking for here. If we compare it with the DAX here from a second ago, we have the exact same movement, but the Swedish market is only here. So I'm looking for some sort of upwards movement and then some movement down again. Let's have a look at the Norwegian market. Now, this is not the exact same formation, but I think you start to see the picture here. Upwards movement, some sideways movement where we can start to draw lines on the tops here saying, well, now it is not really rising anymore. And all of a sudden it breaks down, tries to get up, but gets shut down again. And we can start to draw some downwards trending lines again. And therefore, I would suggest that the Norwegian market is also going down from here. Now, the Danish market, where I'm sitting a lot, is not really anywhere near this yet. And the Danish market has been absolutely crazy this year. We are at this point up somewhat of 20%, which is crazy and beating all of the other markets. So right now we are actually still in an upwards movement. And you might want to say, if we are drawing some lines here, but this is getting a bit speculative, you might say that the momentum is getting a little bit out here, but I would think that we would get some more upwards movements and then downwards movement so that we can start making our lines. I'm not just selling just because of this. But again, as you can see in the spring here, we just went from an all-time high and then went straight down 35% into a big hole. First time I've ever seen something like this in a major stock index. So the Danish market right now is still in a quite stable uptrend, but we tend to follow the Norwegian and Swedish market. So of course I am looking at what are the other markets doing. Are there some tendencies here? Now let's have a look at the SPX. Let me just find it for you. Here we go. We have the S&P 500 here, the SPX, and as you can see, nice and steady upwards trend here. Sometimes it is a bit hard. Should I draw the trend line here? Should I draw it here? But it doesn't really matter. On a weekly chart, it all moves so slowly that we have a lot of time to adjust our trend lines and channels. So here we have an upward trend. Nobody is doubting that. We also have an upward trending here, but it seems like it is taking a bit of a speed off now. Still, it's moving very quickly. Just over a few months here, we are seeing 20% upward movement. So it's not really that I was worried about anything. But we have a bottom here. We have a bottom here. I just extended this line here. And then it broke down a bit over a month ago, but it was nothing serious really. It was bought up again here by the buyers, but that meant I could put a bottom here and a bottom here and saying, now this trend line is one I'm looking for now, and we can easily see that it is like the momentum is getting slower and slower here, meaning that the sellers are selling the index deeper and deeper down, and at the same time this little decrease in momentum has gotten very severe here, because now we have a top and we can now start to draw a downwards trending line. Now what I'm looking for here is if this line here will be broken. I have a feeling that it will, but it's just a feeling and I never act on feelings. But if it gets broken, if we get down to 3200, it's only 6 to 8% down here. If it gets down here, break this line, break this bottom point here, then I think that the S&P 500 will be going down. Now, do we have any historical evidence to show us that these lines that starts to shift in momentum, that there is any evidence that we could use that for some sort of trading strategy? Now, if you take a look at here, we have the 2018, where we had this breakdown. It actually was just touching on a bear market, 20% down. You might remember it at the end of 2018. And what we can see here is that we broke a trend line. There was not too much of a momentum shift actually. We had this trend line, we broke it, we tried to get up, and then we could start to draw this trend line here. Now that meant that in this turn of the market we didn't get the full benefit of it, because of course if we really want to be out of the market, we want the market to go way down before we can start buying again. But we did miss out, if you could say so, this entire move down, because around here it was obvious in our little trend analysis here that we were at a turning point. So somewhere here around 2700, and the market went down to 2300. Now then the problem of course was that we didn't have a very good bottom formation, so it was hard to say exactly when have we bottomed out. But somewhere around here, when we started to break the earlier tops here, it was obvious, and of course that would have left us with a little loss from the 2700 and up to somewhere around 2800. But that's okay in my book. Here we can see it again, and you can see it's not like it's foolproof, because here we had the trend. We started to get some lower bottoms. Again, it's hard to say exactly how we will draw this, but we start to get some very significant lower tops. So around here I was getting very worried. That was in the beginning of 18. I was getting very worried that we were moving into a negative territory, but right away the market shot straight up. And it's not like I'm selling all my stocks here. I'm just restricting a bit on my own strategy as to how much I can invest. If I'm using a bit of leverage, when I'm starting to see a potential downturn, I'm taking all leverage off the table. And as soon as I see a break up again here, there's no doubt in my mind that now I am fully invested in the market again. So let's get back here. And if some of you can remember the time around 2015, you might remember that that was a very tough time. And what we can see here is that we have this trend line. It was a bit challenged here, but at least there was a trend line here. And what we saw was that all of a sudden we started to lose momentum at the top level here. So around here, I was pretty confident that I was not to be in the market, at least not at a full scale here. And the market chopped a bit sideways, and it actually kept chopping sideways from around August here, and then up until July in the year after. So it's pretty much a year we just went sideways here. If you were in the market in 2015 and you are a trend follower, you know that 15 and 16 were some of the toughest years at all, because we just got some buy signals, but then we bought a lot of stocks, then we got the sell signals, then we sold the stocks, then we got the buy signals. It was so large chops that we were bought in and sold out of the market several times, and we just followed a strategy like this. So 2015, if you're looking at the stats for pretty much all trend followers, that was some tough times, no doubt about it. When do we have a top again? Well, we have back here in 11, that was also a very tough year, where we have the top levels here starting to level a bit off, losing momentum, and all of a sudden we can see, wow, I wonder if we're going down here. We didn't go down into a big black hole. We only went down from the second we could start seeing some evidence. We went down something like 16%. And of course, we could have just held the market and we would have been back in the positive again. But again, in this entire period here, from let's say July 11 and up until March 12, our money could have been parked in something else. And what you can see here is that here we start to get a good signal that we have lower bottoms, and then all of a sudden higher bottoms. So around here we could have gotten in and invested in the best trending stocks again. Now, where it gets really interesting is, of course, could we have quote unquote foreseen the breakdown in 2008? And what we can see here is that we have the trend quite nicely here, going up very strongly, and then it broke down, but it went up again, and that just tells us that this is not a complete foolproof money maker. But we did break down here in August 07 and went up again, but then we leveled up at the bottoms here, the top starting definitely to lose momentum. All of a sudden we were getting lower tops. So around here in December 07, I was confident that we were going down. I had, of course, no idea whatsoever that it would be one of the largest financial meltdown in your history. That's just how it is. I'm not trying to predict. I'm just observing what I can see in the market. And the funny part is that in the late autumn, starting of the winter in 2007, I was out and having a speech at a shareholder meeting in Aarhus in Denmark. And one of the participants, we were talking about psychology in the stock market, and one of the participants asked me how far up I thought the market would go from here and how quickly. And I said, it won't. I'm pretty sure we are going down, and I'm pretty sure that it will be at least somewhere between 10 to 20%. And pretty much the entire room laughed at me and thought I was complete crazy, because of course everybody knew that this bull market could go on forever. And as you know, it didn't. So we could have not foreseen, not predicted, because we're not predicting, but we can see that the momentum is rolling over, and around here we are pretty much out of all our stocks, and we know that we need to be very careful before entering again. Now back here, you could say that this is in 04, 05 here. You could say that we started to get some tops here, some bottoms here, and this might have made us a bit cautious and saying, well, now I don't want to be 100% in stocks again. But pretty soon we got new higher tops, and all of a sudden this potential downturn was nullified. It was simply the premises had changed. Now, an interesting part, of course, here we can see that the big downturn from the dot-com crash, if you were in the market at that point, you know what I'm talking about. And you can see the bottoms here slowly starting to lose downwards momentum. Here, starting to make new higher tops. And we saw a break here in May 03, and we could have been in the market from the summer 03. Not from the entire bottoms here. Of course, someone with a perfect crystal ball would have gone in here in July 02 and then just ridden the market from there. But we don't have a crystal ball. We can only see what the market is doing. Could we have, quote unquote, predicted the top in in the dot-com crash here, where the market had gone up like crazy. Yeah, we pretty much could. Now, there was some big downturns here, but we didn't have any real lower tops. So that one was kind of it was just some spiking down. Now, around here, we could have started to argue, is this a lower top? Yes, it might be. And we would have been a bit more careful investing. But then again, we started to move upwards and this potential downturn was cancelled. Now, what we saw here was pretty much the same. We saw some lower tops here. We saw that our lower trend line here were broken down. So from around October, November 2000, we could have been pretty much out of the market and we didn't see any real sign of recovery. We did see one here though, where we might have said, is this a higher top? And then we just needed some confirmation to see, can we get a higher bottom here? Can we get a higher top as well? But we didn't, and it turned downwards. And if we had gotten cheated into some stocks here or tricked into some stocks, we would have gotten out pretty quickly again. And we would have gotten into the market here in April, May, June of 2003. And we can keep going on like this. And every time we see a top, almost every time we see a top, there is the exact same structure. You can see it here, falling tops, falling bottoms. Now here we might have been tricked in and saying now we are at a new bull market, and we might have been tricked into this and gotten a bit of a loss. Now it's not like, as I said earlier, it's not like I'm selling all my stocks whenever I'm seeing something like this. But for instance, in the current market, I am very, very picky as to what stocks I'm buying. And when we're in a market where I can see we're constantly making higher tops and higher bottoms, I'm more jumping in every buy signal. I'm getting solid stocks with good buy signals, and I might even use a bit of leverage. As soon as I see a market like this, I'm taking all leverage off. And I am pretty much, all my sell signals are pretty much triggered, so I'm out of the market. And then sometimes I lose a bit of upside, but that is okay for me. Here we can see it again. We have some very distinct upwards trending. Now we are back in the, funny enough, 87 here, where we had the big crash. I made a video about that the other day. So we have this very steep uptrending market. All of a sudden we start to make some lower tops, and somewhere around here in the 300 area we would have gotten out of the market with this strategy. Lower tops, lower bottoms. We would have gotten out of the market. We would not have had a 22.5% losing day, because we would be out long before that. Then we will start to see at some point that we had some rising bottoms. And remember, we can only see that when we are around here, because we don't know that it is happening right here. So around here, around 260, we would be in the market again, and we would be riding this trend all the way up until we got some danger signals again. So as I said, this is not a perfect strategy that'll get you out exactly at the top or in at the bottom at every single market turn, but it'll keep you out of all of the large turns. And there, as I said, right now, when I'm looking at the structure in this market, I am actually quite worried, because we're starting to see this topping off formation. And now I know I'm getting some comments. I always get it. And I can see it in all sorts of Facebook groups around the world. People are saying whenever I'm posting a video, there are some lunatic writing, "Don't listen to this guy. He has been trying to predict the market for years and without any luck." and I can't really help laughing at these guys, because it means they have not listened to what I'm saying. I am not trying to predict. I am a market observer. You know the metaphor I'm usually telling, where I'm saying I absolutely know that I can't predict the market, and I'm not more smarter than the rest of the market. So I see myself as this little flea jumping on the back of a big elephant, riding in the right direction. And whenever this elephant is showing signs of slowing down or making the wrong turn, then I get off and I jump on the next elephant that is going in the right direction. So this for me is an elephant turning point. This for me is telling that, for instance, in the DAX index, where billions are traded each and every day in the German stock market, when all the big players on a weekly chart can make this happen, it means weakness. It doesn't mean complete market crash. It doesn't mean 50% off in the market. I never ever try to predict how far a market will go in any direction. But this signals weakness. All right, I hope that was some sort of inspiration for you. Remember to subscribe. Remember to sign up for the newsletter. And remember to take care of yourself and your money out there. I'll talk to you again very soon. Thank you for now.